Have you ever stopped to wonder where the world's biggest companies actually keep all their digital stuff? Well, welcome to the EDGAR brief. Today, we're cracking open the Q4 and full fiscal year 2026 8K filing from NetApp. That's ticker symbol NTAP, filed on May 28, 2026. We're going to translate this pretty dense document into plain English so you can see exactly how this business actually operates behind the scenes. Just a quick note before we jump in. We're independent. We are not affiliated with the SEC, and we are absolutely not financial advisors. We do use AI to help summarize things, so, errors can happen. Always verify facts on sec.gov before making any money decisions. All right, let's dive right into this.
Okay, I want to hook you immediately with this absolutely massive number. $1.87 billion. That is NetApp's free cash flow for the entire year. I want you to just keep this number in the back of your mind as we go through this explainer, because honestly, it's the ultimate proof that NetApp isn't just some abstract tech concept. It is a highly profitable cash machine.
Section 1. The business model. How NetApp makes money.
So before we get to the financial scorecard, we really need to understand the mechanics of the machine itself, right? Because if you want to understand a business, you have to understand how money physically moves from a customer's pocket straight into the company's bank account. So what exactly do they sell? Well, imagine NetApp as this massive, ultra-high-tech self-storage facility for enterprise data, but with the world's absolute smartest librarian living inside of it. When giant corporations have petabytes of customer records, financial data, and complex apps, they don't just dump it on a random hard drive. No way. They pay NetApp to store it securely, organize it brilliantly, and make sure it's accessible in literal milliseconds.
Now, NetApp basically splits this business into two main revenue streams. First up is the hybrid cloud. And this is the physical stuff. They literally sell the physical storage boxes and systems that huge companies keep in their own private on-premise server rooms. And then there's the public cloud, which is the digital software and services operating directly out in the cloud, on the internet. So you pay them for the physical box, and then you pay them for the software that runs it and connects it to the rest of the world. It's a pretty powerful combination.
Moving on to Section 2, the scorecard. Let's take a look at their fiscal year 2026 financial results. Now that we know they're essentially the ultimate high-tech self-storage business, it's time to translate the hard numbers from the filing to see how the business actually performed over the last year. Let's walk through these four key figures. First up, revenue. Are more dollars actually walking in the door? Yup, 6.93 billion of them, which is a really solid 5% bump from last year. Next is gross margin, sitting at 70.7%. Think of this as the toll booth, okay? For every dollar they make, about 71 cents sticks around after paying for the raw materials to build their products. Then we've got operating income at $1.67 billion. This is the real profit from the actual everyday business before any fancy financing tricks get involved. And finally, there's that $1.87 billion in free cash flow we talked about at the start.
And look, for the average investor, this is arguably the most crucial concept to grasp. What exactly is free cash flow? It is the actual, real cash left over after paying all the bills and maintaining the equipment. Listen, accounting profit can sometimes be a bit of a work of fiction. Companies can use completely legal accounting rules to make profits look a lot better than they actually are. But cash? Cash in the bank literally cannot be manipulated. It is the ultimate truth teller of a company's health, and NetApp is just generating a total mountain of it.
And speaking of financial health, NetApp has a massive margin of safety. They have long-term debt sitting at $2.49 billion, but their cash and short-term investments sit right next to it at $3.58 billion. What does that mean in plain English? It means if every single customer stopped paying NetApp tomorrow, their massive cash pile keeps the lights on comfortably. They could literally pay off all their long-term debt tomorrow and still have over $1 billion sitting in the checking account. I mean, that is serious security right there.
Section 3. The moat check.
So what is protecting this castle? Why couldn't a smart, well-funded competitor just build a cheaper data storage network tomorrow and steal all of NetApp's customers? Well, it's because NetApp isn't just some standalone service you can easily swap out. They are natively embedded into the biggest digital real estate in the world. They have these incredibly deep integrations with Amazon Web Services, Google Cloud, and Microsoft Azure. If you are a massive enterprise running on Google Cloud, NetApp's tools are already baked right in. And because their software is so deeply entangled in a company's daily operations, the switching costs are astronomically high. Imagine trying to pack up and move your entire house to a new state over a single weekend. It'd be a nightmare, right? Customers would absolutely scream if their IT department told them they had to switch away from NetApp. That right there is a highly durable moat.
Section 4. Reading between the lines. Let's look at management's narrative.
As we dive into the management's discussion and analysis section, we're really looking for what the executives are emphasizing. Are they owning their results, or are they making excuses? Well, in this particular filing, management is leaning heavily into two very specific letters, A and I. CEO George Kurian states, "Our industry-leading hybrid cloud intelligent data infrastructure platform is powering customers' AI-driven transformations." So management is aggressively pushing this narrative to investors that NetApp is the ultimate AI data engine. It's a fantastic story, but as always, we have to ask the hard question. Do the actual numbers back up the hype?
And the answer is actually yes. 18%. That is the year-over-year revenue growth of their all-flash array hardware in Q4, which brought in $1.2 billion in just 3 months. Let me translate why that matters. All-flash arrays are the high-performance, super-fast physical storage boxes that are absolutely required for heavy artificial intelligence workloads. AI needs to read massive amounts of data instantly. Standard hard drives are just way too slow. Flash arrays are basically the sports cars of data storage. The fact that this specific AI-critical hardware is growing at 18% totally validates the CEO's excitement. The AI boom is quite literally driving dollars right to their door.
Section 5. Red flags to watch. Let's talk about the operational threats.
Because it's not all sunshine, right? It's time to pivot to the risk factors. We're stripping away all that lawyer-written, asteroid strike, boilerplate stuff to find the genuine operational threats hidden in the fine print. First, macroeconomic conditions. If the broader economy cools down, big companies tighten their belts, and those massive IT upgrades, they get delayed. Second is shifts in AI hardware demands. Tech moves incredibly fast, and NetApp has to constantly keep up. But the really interesting one to me is foreign exchange volatility. You see, NetApp operates globally, and in this filing, they noted that favorable currency exchange rates actually added $65 million to their net income this year. That is a massive tailwind. But remember, currencies constantly fluctuate. A tailwind this year could incredibly easily become a $65 million headwind next year if the US dollar suddenly strengthens.
And finally, Section 6, the bottom line, our final verdict.
All right, so we've looked at the business model, the cash flow, the moat, and the real risks. Our final verdict on NetApp's business, based purely on the cold hard numbers we've decoded today, is this. NetApp is a highly profitable cash cow with a very durable moat, currently capitalizing on the AI boom through deep, sticky cloud integrations. They sit right at that critical intersection of physical storage and cloud software, essentially acting as the indispensable librarian for the world's biggest tech platforms. No hype, no wild stock price predictions here, just the objective reality of what's on their balance sheet.
Which really leaves us with one big provocative question to track for their next filing. Will their AI hardware momentum actually sustain this accelerated growth into fiscal year 2027? Or are enterprise IT budgets going to start cooling down? And that is your EDGAR brief on NetApp. Remember, this was purely an educational translation of an SEC filing. Definitely not a recommendation to buy or sell anything. If anything we discussed today piques your interest, I highly encourage you to go read the original 8K for yourself on sec.gov. Thanks so much for hanging out with us to learn how this fascinating business works. I'm your host, and I will see you in the next filing.